All right. It's Jared here from Crypto Plan, and how is everyone going? It's Sunday afternoon here in Ireland, and I hope you're all having a great time. We're going to have a look at the Harmony 1 chart, and we're going to have a look at some reasons why I think it's going to go up, and where it's going to go back to, and then where I think it's going to go up to again. Okay, so yeah, please like and subscribe the video. Sorry, I just left that little bit of music running there because someone made a comment on the music earlier. It's just some like glitch hop, some random gaming music that I just don't have access to my archive of usual stuff that I drop in there on a regular basis, and have been switching over period of the laptop. So that's all that is all that is for. So we're just kind of using random other people's music. So glitch hop gaming music is the stuff. You can Google it on YouTube. Anyway, just a small sample because I don't want to be stealing anyone's work. Anyway, we are on the Harmony chart, and we are going to have a look at what's happened, what we think is going to happen, and what could happen. Because someone raised a comment or concern and said they didn't subscribe because there's no downside target, so there's no kind of opposing view, and I get that. But I guess I'm going to put this chart up here because this was my original kind of predictory chart for the transition of one. Now it's kind of slightly whack, like out of whack, but essentially I do predict that it goes up and then it corrects and then it goes up, then it corrects and then it goes up, right? So I'm not one that's sitting here going things go up in straight lines. I get it. There's corrections all the time, but essentially this has happened, So we had a peak. I predicted it would go to 17 cent. 1.7 cent. It actually went up to 3.9 cent. And then it pulled back to that 17 cents. So, it's kind of a little bit more bullish than I even anticipated. And then once again, the next move, it reached that all-time high, which I kind of predicted, which was around 4 cents here. So it kind of turned around, made a big pop up to 5 cents, and then pulled back again. And then now it's going on this kind of last move. Now, I don't want to kind of give any long-term predictions because I don't believe that anyone can do that. Just because there's no history in this particular coin, there's no market cycle or evidence of where it wants to go to or where people are kind of predicting. So I think all we can do is do the Fibonacci, and I think the Fibonacci seems to have played out the best so far. So if we were to Fibonacci this, we can say straight away that this particular move here may be going to about 10 cents. And so, if you were looking to take profits or you were looking to kind of reconsider some things, that's the point where I'd be setting some targets at. Now, if you're holding for the long term, then all that presents then again is that there may also be a 50% retracement from that target, because that's what cryptocurrencies do. They retrace 30 to 55% from their moves. They're quite volatile. So once again, if we go up to there and we say, if you don't want to participate right now and you're happy to just sit on the sidelines, then where is a 50% retracement? So that's down to the 1.68. So if it was to go up to 10 and you're a long-term holder, and during that period you collect some more fiat and you want to top up your bag, you'd be looking for 5 cents again, right? So once, that's the kind of realistic way you should play these, that if there's a big massive move off a base here of 3.6 cents and moves up to 10, you don't want to participate in that because it's just moving and you're happy watching your portfolio grow. It gets to the top, it starts to pull back, you don't want to sell. Well, then you start looking at where's it going to retrace to, So if we then kind of look at these moves and where they retrace to, so this one in particular retraced 53%, so you've got some history there of 53% retracement. Even this little peak here came straight back down 36%. So if you saw that and you were like, oh, it's going to go to the moon, and then within a day it pulled back and it said, oh, there's a good base, there's a good buy-in point, right? But right now, I'm the sort of person that particularly doesn't play this. There is some traders that go, great breakout, I'm going to play this chunk here. I'm going to take, snipe some money out of here, like buy here, sell here before it gets there. That's a different approach to trading. But I'm a kind of a buy and hold, top up, and then scale out again on the other side, right? So for me, 10 cents is that target point. Possibly take some profits, possibly take something off the table. But depending on the situation, you could be putting those profits back in again. So let's say you take 30% out at 10 cents, and then you put 15% of that, 50% of that 30% that you take out back in at 5 cents if it did dip down to it again to continue on the run, right? So you've taken some risk off the table, you've taken your tax out, and then you go, do you know what, I want to play again. It's retraced to a certain level and I want to go forward. Now, longer term, we all have to respect that we are in a bull market, and the bull market will end probably around about a month or two after Bitcoin kind of reaches its top and starts to retrace. So then, you've just got to look to what's happened. So we've got this kind of 2 cent level that looks like a solid retracement, so we could go back as far as there. But we've also got this kind of 3.5 cent level, so that's kind of a solid area that you can be looking towards, for the next cycle low. So once it goes up again, and we've all seen coins and projects that go up parabolic, and then they drop back to a solid base of price action, right? So you've just got to be aware of these, and once again, even this move here, there's every right for it to come and retest this base here of 4 cents, so not saying it would spend a lot of time there if we were still in a bull run, but it has every right to kind of reverse on itself, test and say, where are we at, and then bang, move on out of there. So I guess we'll just kind of move these arrows again just to kind of replicate what has happened. So we've got something a bit more realistic to kind of look for, and then so maybe this will be the 2 cent one. We're looking to come back to maybe 5 cents if we're lucky, and then this one is just question mark. So Harmony one, it is blowing my mind, especially if you look over on the right here. Everything is red and Harmony is just on a tear. And it seems to have been that way a lot, and it's kind of one of the better moves in my portfolio. And along with Game, like people say, why would you buy Game? Like, it's gone, forgotten, rah. But it's so low, it's so depressed, it's so forgotten that you can see right now today, 6% on a day when everything's red, right? So, there's kind of these few plays, one a contrarian play and one a kind of popular play, but low market cap coin that is still very bullish because the chart says it needs to be bullish. It's spent, 15th of Feb, it spent a month consolidating, trying to break this, 3.9 cent all-time high. It can't, if it's going to break through it, it's going to go up heavily, it's either going to kind of continue to tap and pull back again, which it didn't do. And so once it did break through, we all knew it was going to be bullish, and it definitely gives us a signal as well, so if we kind of zoom in here, I love this thing because, this big wick here says that's where we want to be, but we're going to kind of consolidate again, So if you've seen that and you missed out, you're like, well, I'm going to wait, buy this dip, and buying it 1.7 cents, you're kind of like, well, it's at least wants to get up to 3.9 cents, so then you buy this dip, it gets up to 3.9 cents. What does it do? It goes nuts. And then it lets you know where it wants to be next time. And then it consolidates a bit, right? And then when it gets up to the 5 cent region, right? So it lets you know where it wants to be, and then went above it, kind of hovered around, and then now it's moving on out of that. So it's saying that it wants to be in price discovery. We don't know where it's going to be, but the market cap of this particular project, it was under 200 the other day. So to move to $1 billion, which is kind of like a comfortable market cap that's not too big, not too small. We've still got a 5x on this. So even though I've got that short-term target of 10 cents, there is a lot more in the tank I see for Harmony. I just don't want to call it, because once it gets to that, I think it's just hold on to whatever you got. If you've taken risk off the table, hold on to whatever you got, wait and see what Bitcoin does, and then decide then. Like if you're saying the day Bitcoin reaches X amount, I'm going to sell everything, that's your plan. If you're saying 2 weeks after Bitcoin reaches its all-time high, when I know the high is in for Bitcoin, then I'm going to sell everything, So you've got to have your own exit strategy. There's plenty of videos out there on people that talk about their exit strategies, tell you how to predict the exit strategy. For me, I follow a few kind of people like Blockchain Backer that kind of keep me in the vibe of what's going on in the market. But at the end of the day, I think once you're risk off, once you've taken some of your profits at the higher targets where your bags have hit 10, you're like, well, let's take out my initial investment or something like that. Then what have you got to lose, really, besides a popcorn trade where you see it go all the way back to the bottom? But I guess you just got to go, well, if Bitcoin's at the top, mine goes to a top and starts retracing, well, then try and get the hell out of there, right? Because it gets harder and harder once on the other side of the trade. You kind of want to be selling out before the peak, right? Because that's when there's buyers in the market. When you've kind of turned the corner, there's not as many buyers there. So even though crypto is quite liquid, you still got to be cautious there. If you've got larger bags and trying to offload them quickly, it could be quite disastrous, especially if you're looking for market orders. But another thing I guess I want to point to with Harmony, just to keep things in perspective, is that volume is up. So I think we're still going up, like we've got green candles, volume is up. All the sellers were shaken out here and shaken out here. So I think we've got all buyers at the moment, green candles. We've got 22 hours left in the day. I think there's plenty to go. I think, like I say, this 10 cents is not too far away, and then there's a pullback. So if you haven't got a bag of Harmony now and you want to, maybe just let the day or two play out, wait for that pullback. Even if the pullback is to 7 cents, wouldn't you rather watch it go up to 10 and then pull back to 7 and then firing out of there, rather than buying at 7, going up to 10, then pulling back to 7 again? You know what I mean? Like, your money is sitting there idle if you play this move now, unless you're planning to buy at 7 and sell at 9, if you know what I mean. So you kind of want to make your money work for you and not be stagnant. But yeah, so that's one thing. And then I guess the last thing that I like to look for in making decisions on when things will correct, and I definitely don't think these are the markers for when the end will correct, because I think the more bullish we get, the further we get away from moving averages. But down here, if you see, we have a particular indicator, which is distance from moving average. So that's the distance from the 30 moving average. So on the daily, distance from 30-day moving average. And if we look back here, back in April, we got to 170% from our 30-day moving average, and then pulled back sharply. So it was an indicator there, and then it's saying, once again, that's when the market was happy around about there to pull back. And so right now, in the price discovery we're in, we are only 100% from that moving average. So we've probably got a little bit left in the tank, and I think once we do get up to that 10, that's probably when we're starting to get to that 170, 180% from our moving average, which is probably, once again, that correction zone. But what you might find is that the next one, it moves to 210% from its 30-day moving average. So you will kind of set that bar up a bit, or get an average of the three kind of peaks there. so that the next move, well, then there's my next target or my next potential target. So you're not necessarily looking for a price target, you're looking for a distance from a moving average target to take profits. So that's another little trick that I use. Other great chart analysts have kind of alluded to that, so I've picked that up. But essentially, for me, Harmony is a hold. It's buy if you've got money to waste. It's definitely going up from here if you want to top up your bag. But definitely a hold for me. Looking at these volume spikes that happened here that moved us up to this particular zone, we've got a similar thing happening here, a couple of big spikes. So I'd like to see another couple of more solid green candles, and then we'll pull back a bit and go into this kind of bearish zone again where there's a bit of selling and sideways action, and then maybe that last final leg moving into the alt season, or the finishing move for the alt season, which we'll just put the random target up there for somewhere around 50 cents, hey? Just because, I guess, by having this visual aid, you're kind of looking and going, well, that move there was about that big, then this move, and then that move there is kind of a little bit smaller, and then that final move is probably going to be as big as the first move or slightly bigger. So, let's just put that around there. We're not trying to be critical on time or anything. So anyway, that's one Harmony. This video wasn't so much about saying where Harmony could go. It's just more about what I'm doing, where I'm looking, how I'm looking for targets at the upper end, what I'm looking for in retracements, what I'm looking for to, cash out at, or, indicators I'm using to take profits off the table, these sort of things. And then essentially, having these charts for the next bull market in 4 years, when you can go, well, in 2 years' time, if we get pulled back to any of these levels, well, they're definitely large accumulation zones, because these are the areas where a lot of time was spent correcting and bouncing around in, right? So anywhere between 3.5 cents and 2 cents there could potentially be the spot where the dip in the next bear market is. I'm going to leave it there. Thanks for listening. Like, subscribe, and share this video with people that also want to get this content. And I've been Jared, and this has been Crypto Plan. Bye bye.